Hey, what's up, everybody? John Hiley here with the Tactical Dent Tech Podcast, bringing you another powerful episode today where I'm going to be introducing you to my friend, Marc Ruiz, who is a real estate Mongol up there. Some of you guys up in Tulsa need to go look this guy up. And not only does he specialize in real estate, but he also specializes in making sure you do not pay too many taxes. And that is all done through real estate investment. So today we're going to be talking about some tax strategies. We're going to be talking about just the power of building wealth in real estate. I know many of you guys do not want to pay Uncle Sam all that money at the end of the year, and it would be just much better to not only build your wealth empire, but also have that built for your family and generations to come. So welcome, my man. How you doing today?
I'm great. Thanks, John.
Good, man. Good. So this has been due for a little while. I think we were going to do a Zoom a couple times, and we were doing some photos and video shoots with you, some of your courses and things like that, a month or so back. And I think that we were supposed to do this podcast then. And the problem is we get to talking and we just totally forgot about it. And then it's one of them things where we text the next day and we say, man, that podcast we were supposed to do, we totally forgot to do that.
We got a lot of content that day.
We got a ton of content that day, my man. And I never, thought I would ever know so much about tax strategy and, real estate investment until I started working with Marc here. Really opened up not only a new world as far as what it is to invest in these type of properties and what it can actually do for you when you invest in these kind of properties, but also how to, again, go back to the whole tax thing, making sure that you're not just pumping and paying all your money to Uncle Sam. So my man, Marc, tell us a little bit about yourself. I know, let's start off. How'd you get into this?
So I started investing in real estate about 20 years ago. Ironically, I was watching late night TV. Remember those infomercials from back in the day?
I do.
So I was up late. I was watching TV, and you had George Foreman selling grills. You had Tony Little selling exercise equipment, and then Robert Allen comes up and says, "You can buy real estate with no money down."
I remember that guy.
Fantastic, because I was 21 years old. I didn't have any money. So I jumped on it. I got in the course. I started working with it. And we started with some creative real estate. As we progressed, we get into some wholesaling, and then what really gets me, or gets my gears, is I love fix and flip. I like to remodel. I like to take what's old and make it new. So for the first 10 years, I'm just fixing houses. Well, along the way, I figured out, I created a new problem. Like, we're making money. I'm in it to make money. Like, there's a lot of money in real estate, but there's a lot of ways to make money. But we're making money. We're making so much money that Uncle Sam sticks his hand out. Well, I don't want to give my money to him. So we start investing in rentals. And, I build this rental empire, and okay, this is great. We're not paying taxes. We're managing all these rentals, and we're doing these remodels, and we're having fun. And as time progressed, it's like I realized that everyone wants to invest in real estate. It looks shiny. They watch HGTV. And it looks fun. And it's not all rainbows and roses. What we've figured out, working with a lot of folks, especially high income individuals, high net worth individuals, you have to realize that real estate is a business. Real estate is a skill set, investing in real estate profitably. And what we figured out is people want the benefit of real estate and don't really need and or want the details of running a real estate business, if that makes sense.
Yeah, it does.
So what we decided to do, and how we got to where we are now, is we are utilizing our skill sets. I love real estate. I'm part of it is I'm not smart enough to do anything else. This is what I've done. This is what I know. This has been this is my life's work. This isn't a hobby. This isn't something I've stumbled across. This is something I have done literally my entire adult life. So, working with other people who want to invest, and as we saw an opportunity, you want the cash flow, you want the tax benefits without having to put into work. And oftentimes, if you really look at it, you really think about it, you double down on what you're doing, you make more money than you would if you were to chase two rabbits. When I say chase two rabbits, like you spend your career, you're a doctor, you're a lawyer, you're a dent guy, or whatever it is, you're making money. And then you go to try to learn a whole new skill set and a whole new career. Like, you're not factoring in the learning curve. You're not factoring in the time it takes to get good at it and to really make it profitable. So what often happens is it's creating more of a distraction than it is a profit. So what we positioned ourselves where we can help you guys by leveraging our expertise, leveraging our systems, our people, our operations, allowing you to buy into the system, buy into the real estate. You own the piece of property, but we own a construction company. We own the management company. We own the maintenance company. Like, this is stuff that we do in-house for ourselves. So we started offering it to other working professionals, because we're able to allow you to focus on what your main thing is.
Right.
You focus on making money. You focus on what you're good at. You double down. You make more money, and then you combine that with a good operator who can then grow that exponentially. Because you put money in real estate, you're not only making the cash flow from owning it, you're getting the tax benefits. You're getting the equity play. You're getting the long-term benefits. So It's not just get rich quick.
Yeah. So the big thing that I've learned, working with Mark, is that the tax benefits are incredible in real estate. And in fact, any good accountant or tax professional is going to lean towards real estate. And what Mark is talking about here is they got a large depreciation factor, meaning you can take all the depreciation in real estate, I believe, within like the first 3 years.
So there's a couple ways to go about this.
Yeah.
You have your normal straight line depreciation, which is on a 27.5-year schedule. So it's not exciting, but it is a tax write-off.
Yeah.
Also, another tax benefit is you get to write off any and all normal operating expenses. So things that you spend, your mortgage interest. So you borrow money to buy a property. You're making payments on the principal, but the interest portion is tax deductible. So you're not having to pay to borrow the money, if that makes sense.
Yeah.
Then you get to pay off, write off any marketing, any property management fees, any maintenance fees. Like, any money that you spend on the property is a write-off. Now, where we get gets more exciting, and we're able to make a greater impact on your tax position, to give you more tax shelter, is what we do, a cost segregation. What that is instead of just depreciating the whole house in one piece like normal, we segregate the different pieces, and then you depreciate each item independently. So you take the flooring, you take the air conditioning, you take the roofing, you take the driveway, like you piece everything out, and then you are able to accelerate the depreciation schedule, and then you can run it on a 5-year, 7-year, 15, or 27-year schedule. And what that allows you to do is you can really front load the depreciation. So just a quick example. We're selling a duplex for $375,000. To buy it conventionally is a 25% down payment. Your closing cost, you're just shy of $100,000 out of pocket. And we take that $100,000 out of pocket. Now, and this works best if you have a tax bill. Like, if you have the cash and you owe taxes, this is where it really is advantageous, because you're able to, instead of giving that cash and donating it to the IRS, you're able to put it into a tangible asset, a cash flowing asset, and then we accelerate the depreciation, and you have roughly $70,000 in depreciation that you get to now offset your income. And where this gets, and I talk to your tax professional, because there's lots of little details in how this actually works.
Yeah. And we got some tax guys you can talk to as well. So, me and Mark know a lot of tax professionals.
Right. But, depending on your income level, so number one thing is you don't get the actual $70,000 cash for dollar for dollar value in your cash deduction or your tax savings. You get whatever your tax bracket is. So if it's 25, 30, 35%, that's the amount of cash that you save on your taxes. But where it can get, if that $70,000 of depreciation brings you down a level,
right?
Now your tax bracket, you can change your tax brackets.
Yeah. And if you keep buying these things, you can literally owe no taxes.
Correct.
And you'll have some tangible assets and some, really a lot of people need this, Mark, because I think a lot of times, years ago, I used to focus on how much liquid capital I had rather than, how many assets that I had. And a lot of times, you do want some liquid capital, if you have opportunity that comes up that you can buy something relatively quick. And if you're disciplined enough to not spend it on something stupid. But having assets that grow over time is just what I see a lot of dent guys that retire, that I know that have retired, that have made millions and millions of dollars over their career, 30 years pushing dents, some years really, really big, some years very, very decent. These guys, they make great money throughout their career. And you end up at the end of everything having a couple boats, a house, and, a couple trucks. That's not good enough. You really got to start thinking ahead. It would be much better if you had, $10 million worth of real estate at the end of your career, because that's about what it takes to retire nowadays.
Right. Well, and that's what we look to do. We want to stack the deck. We want to give you as many advantages as you can get. So, step one, you're creating cash flow right off the bat because you have people paying your rent and you're making the spread between what the expenses are and what the income is. Second of all, you're creating equity because these things appreciate in value. So they don't, every year they're worth a little bit more. I mean, it's not drastic. It's not.
It was drastic over the last 4 years.
Yes, it can be. It can be. That's not normal.
Right. But it really worked out in my benefit. I can tell you that. We sold our house in Ohio and made a heck of a. And we were at the peak, though. We sold that thing at, I'd say not quite at the peak, but we were getting up there close to the peak when we sold.
So,
and man, it was great.
So they increase in value.
Yeah.
Every month, your tenant makes a payment, it decreases the loan balance. So you create more equity. So you have a greater spread. And then you take the tax benefits. And it's really going to get interesting because what we're seeing with the new administration, because right now there's a 60% cap on the bonus depreciation. Well, before, last time he was in office, and we expect at this time, it will take that back up to 100%. So those numbers are actually going to get better.
There we go. Put a business owner in office, bro. See what happens.
Right.
Mark, and I want to ask you, because all the tax stuff is great. I think everybody gets that, and they're starting to understand that. But I really want you to go in detail because these properties that you're doing now, they're not your fix and flip properties, right? So talk a little bit about, number one, the types of properties that you're building. Talk about the strategy of why you're placing them where you're placing them, and just the need. Because the one question that comes to mind, a lot of guys out there, is like, okay, what if I build a property? It's not going to be rented, but I feel like Mark's really figured this out. Tell them a little bit.
So in the last 20 years, we've remodeled probably 700 houses. And we've learned the ins and outs. Of course, and I'm in Oklahoma. I'm in Tulsa, Oklahoma. Like, I know my backyard. I know the areas. So what we focus on is new construction, new build. A couple reasons why we like new construction is, well, new is better. You don't have any major capital expenditures, major repairs. You don't have to fix anything for the first 5 to 10 years. You don't have to worry about the roof. You don't have to worry about the air conditioner. Everything is new. Everything is under warranty. That also minimizes your maintenance because, even though things aren't a fix and flip or fixed, doesn't necessarily mean they're new. So, and there's still things that could be hiding behind the wall. So with new construction, we put the wall up there. We know every aspect of it from the ground up, literally. You minimize your maintenance expense. they rent faster and for more money because people like new. And typically we attract better quality tenants who want to stay longer because it's new
Right.
and there's not a lot of nicer options out there. However, we focus on what we call, the affordable housing, which is more of an entry, not subsidized housing, but entry-level workforce housing. Your $200,000 house. In our case, we like duplexes. We like duplexes because there's a little more safety in numbers. So you have two sides, you have two doors, so you're getting rent on both sides. And if somebody moves out, you're not completely out.
Right.
So, and it still qualifies as there's a single family 1 to 4. So 1 to 4 units, it still qualifies as single family. You get the benefits of the smaller residential versus going into commercial real estate, multifamily real estate, and those things. So you're getting the benefit of multiple doors, but you're still getting the advantages of being classified single family. Also, property taxes are lower. It's better for a individual than going into commercial real estate, multifamily real estate, because then you get into different levels of municipalities. There's different rules.
Yeah. And I kind of feel like the play that you do where you're kind of building these inside the cities or very close to Tulsa is a good idea because, as Mark explained to me, there's a big need for affordable housing. And I'm not talking about, that Section 8 stuff. We've had a podcast. Mark's got YouTube videos about Section 8. And I'm talking about individuals who live inside of a city. And if you guys have ever went out there and took a look at what places are renting for now, it's just crazy. And these are affordable and they're new.
So what we like to do and what we focus on is we typically, I guess inner city. We're inside the city. We go for infill lots. An infill lot is an empty lot in an existing neighborhood where either a house was not built, a house was torn down, burned down, whatever it is. It's an empty lot. There's already access to utilities because we don't want to get into development. We don't want to have to get into infrastructure because that's a whole different conversation with a higher price tag. So we take these empty lots and then we build new structures, new houses, new duplexes, and we're working a couple different angles here because we're working in an area and you work in a concentrated area, you're working in a neighborhood and you put a house here and you put a house there and you put a duplex over here and you're slowly house by house, block by block, transforming the quality of that neighborhood. You're improving the value of that neighborhood, and you're also giving better housing options to people who may or may not have had, or giving them more choices than what they may have had otherwise. So we're giving good people, working class people, nice, affordable places to live. And we're not building these, $500,000, $1 million houses. We're building $200,000 houses, $400,000 duplexes. So, it's still affordable, but it's also profitable for the investors.
Right. Yeah, because, Section 8 and stuff like that, we won't go too deep into that today, but the government really has, you almost got to find the perfect property to actually make that profitable. And then, there's just, there's a lot to it. This tends to be kind of more of a blue ocean market. And what I mean by that is that it's not like with all the sharks and everybody's tearing each other apart and blood's dripping everywhere. This is more of something that is very needed. I think, Mark, you spend a lot of time with the city of Tulsa. And
So, to kind of touch on the Section 8, it is a government program. It is run like a government program. There are pros to that is they don't miss a payment. The downside of that is you're treated by the government. And then the biggest thing is the quality of people that come into houses. And you would think that people who are getting free and or assisted living would be appreciative and take care of things, but that's not the way that it works.
Mm-hmm.
Now, moving on to the second point. So I am very vested, very involved in local city government, city politics, and, Oklahoma and Oklahoma in general, but Tulsa specifically, we're having a housing shortage, affordable housing shortage, because most of what's being built are $300,000, $400,000, $500,000 houses, custom houses. You don't see a lot of the entry level affordable homes coming into the space. So what we discovered, and another thing that we're playing on, because I did build, actually when I built my rental portfolio, I built it on Section 8. Like, we worked hand in hand with the housing department. We catered our product to them, and over the years it had become more and more stringent. Their codes and their requirements have increased, and the pay hasn't. And then the lack of accountability on the tenant side when they destroy our property and they move out and we have thousands of dollars in repairs, it left a bad taste in our mouths. Not that we don't do it, we still do. So we still have 70 or so units on housing, but we don't bring new ones in.
Yeah. So you guys just stopped moving towards that market. Well, awesome, Mark. And so I want to touch on this as well before we end up wrapping up this podcast. Is that you also teach people how to do this? So tell us a little bit about, because there might be some guys out there thinking, well, I live up in up in St. Louis, or I live over in Ohio, or I live down in Florida. And there's individuals who might want some of that, educational, because you've got a book coming out, and I know that you've got a course available right now. So tell us a little bit about what you got going on.
We've got the book coming out. We have a digital course. We have a physical mastermind. We're launching the online mastermind. We have the blog. The podcast is going live. Like, we're putting out a ton of information. There is a YouTube channel.
There's a Facebook group too, right?
There's a Facebook group, Rugged Real Estate. But so we can teach you. The principles are actually pretty simple. And once you understand it, building new construction is actually easier than doing fix and flips. It's a little bit more overwhelming in the beginning because there's more steps to it and there's more inspections and city involvement. But once you understand it, it's much more predictable, it's more repeatable, and it's more scalable. And I say that because I know what my build cost is. I know what my dirt cost is. I know what my values are. I know what my rents are. Like, I know all my numbers going into it, so I have no surprises. I have no change orders. Everything is rinse and repeat. Now, this works very well in the Midwest and what we call the cash flow markets. I mean, in Oklahoma, in parts of Texas, it works. In Kansas and Arkansas, and over into
Tennessee,
yeah, it doesn't work great on the West Coast or the East Coast. I mean, there are places in Florida. I do know people that do it in Florida. Yeah. But you're not going to go to California or New York, and this is not.
It's not going to work.
Not going to work. But so the fundamental principles are the same regardless of where you are, and we can take you through the process. We can outline the process. We can give you the information. You can do it yourself. We can give you the information and do it with you, or you can work with us. And what we do is complete turnkey. We build it, we warranty it, we manage it, we maintenance it. That means basically you're trading check for check. Like, you buy the property, you own the property, you have all the benefits of owning the property, but we manage all the day to day, and that's done for you. That's good. So we can meet you on whatever level you're at and wherever way you want to go.
Right. Yeah, the done for you is what I recommend, guys. Unless this is something you were retiring and you really want to get into and sink your teeth into, definitely you always find yourself a mentor, because what happens is Mark has already went through all the trials and tribulations, and he's already hit every wall, and he's already made every mistake. So when you hire somebody like him to teach you, whether if that's just buying his digital course, you're going to be able to circumvent some of these painful lessons. In fact, it was very interesting because we were in here recording the course one day, and he got a phone call from one of his mastermind members who was literally at the closing table, and she had some questions about what was going on, and Mark took the phone call from her, and he actually walked her through that process. Now, if you can imagine, this was like a situation that she was going through, and we don't have to get into the situation, but it was a situation, and she was able to have somebody to walk her through that process so she didn't get screwed by the bank or by the lender, right? And that's a critical point because, many of you guys who learned how to do dent removal, you guys learned from somebody, and that somebody hopefully taught you in such a way that stopped you from making some of the common mistakes that they made in the past, right? So that's why we want mentorship, and that's what Marc has to offer.
What I would recommend for you guys that are out there making good money, and instead of paying taxes on that money, you buy a piece of real estate. If you can buy a house or a duplex, buy a property every year for the next 10 years, and you think about the compounding effect of that. And in fact, we can even we can stack the deck a little bit more, but just the compounding effect. If you buy one property every year for the next 10 years, not only are you making, your cash on cash return, which right now is about $8,000 per property. So if you buy 8 of them, there's $80,000 coming in at the end of 10 years. And that's not a terrible retirement income. Plus you're going to have, about $10 million in real estate, in assets.
That's a dream to retire with that. Another thing that I definitely want to mention this, because this is something I believe a lot of guys, might be questioning in their head who have sold real estate before, is that the key to selling this, I believe, is a 1031 exchange. So talk a little bit about that, because you will get taxed if you take all your depreciations.
So what we recommend for a lot of our investors is we're running a 7-year schedule. We're running the 7-year accelerated depreciation schedule. So if you run that 7 years, you come to the end of it, you have all the depreciation, you sell the property, and you exit with a 1031 exchange. The reason you do that is because you don't have to recapture any of that depreciation that you normally would if you sold it outright, and you don't have to pay any capital gains taxes. But the catch is you have to reinvest it into to a like property. So if you have real estate, you need to buy real estate. But what it allows you to do is take all of your equity and roll it into the next property. So you can, in theory, use that and buy 2 more. You can use that and buy something bigger. You can use that and buy an apartment building. You can use that and buy a warehouse or industrial space. But you're compounding that because you don't have to pay any taxes. Mm-hmm. You don't have to recapture any of the depreciation.
Yeah.
So you're talking about long-term generational. This isn't get rich fast quick. This is looking down the road 5, 10, 20 years, and you compound these things. If you do this every year, and then 7 years you're rolling in, and then you're doubling, and now in 10 years, instead of 10 million in real estate, you have 15 million in real estate, or potentially more, depending on how you play the cards and shuffle the deck.
Yeah. So my accountant told me that one of his clients, she sold a piece of property, and she didn't know about the 1031 exchange because she never called him. She just sold it. And the problem is the money hit her bank account. So the 1031 exchange has to be done by some sort of registered agent of some sort. And this agent actually, the money cannot touch your bank account. It's got to go through them, and then you can purchase the property. And then, because if it touches your bank account, the IRS is going to tax you. They're going to take that depreciation back. So I just wanted to say that because I felt like somebody was going to make a mistake out there and be like, well, these guys didn't tell me about that, right?
Yeah, no, everything that we do is very intentional, very calculated. There are rules, there's regulations. You have to, especially when you're playing in the tax world, you have to be very careful.
You got to do what the politicians do.
You play the loopholes.
Listen, don't think that the politicians don't keep loopholes in there for their own stuff. So you go figure out what them bastards are doing, and you go do it so you don't pay them all your money.
So, and we've actually figured out another level to stack the deck. And I just recently started putting these pieces together because I have a buddy of mine that does infinite banking. And when we combine these things, so you use the infinite banking model, you put, instead of putting, $100,000 cash, you put that $100,000 in, you have to be built correctly. So you need to, financial advisor.
And I got a guy who does that too. I should probably bring him on the podcast.
Yeah. But so you build that policy correctly, you front load it, you put that $100,000 into the policy, then you borrow that money to buy for the down payment for the duplex. So you're making your dividends on the policy, which is 5 to 7%, depending on who you write it with.
Yeah.
And then you put that money from the cash flow from the duplex back into the policy. So now you're doubling down tax free. So instead of making 5% or 7%, you're making 10 to 14%. You still own the asset, and you still have the depreciation and all the tax benefits. So it's growing tax free. You're making your income tax free, and you get to the tax write offs on top of it.
Yeah. So there's, what we call these is running a play, guys. What you basically heard on this podcast today is some really good plays that you can run for your business and for your life. So, and you got to have a play. The more money that you make, guys, you got to figure out some plays that you can run, and you got to run them. And it really pays to look ahead. I can't even tell you how much my mother and my father, they tried to, really instill that in me that, don't spend all your money now. You've really got to think a little bit further, a little bit ahead. And that's just good for you. It's good for you to have that restriction, to restrict yourself from just spending all your money and thinking in the future. It says in the Bible that, a good man gives an inheritance to his grandchildren. So, man, think about how powerful that is.
If done correctly, this is long-term wealth, generational wealth.
Yes.
These are long-term standing assets that are going to be here for your kids, grandkids. I mean, it's all in planning and structuring.
Yeah.
But the vehicle has done it for decades, for generations, for centuries. And this has been going on. I mean, look at Rockefeller.
Yeah. Well, I mean, and if you look at it from the perspective, you're also supplying needs. What's your money really here for? You're helping people because there is a serious need for not only inner city housing, there's a serious need for nicer properties being built in inner cities, because I've seen what happens with Mark. He'll take a whole neighborhood. Next thing you know, they'll have one, they'll have two, then they'll have a strip of 10 of them in there, and it'll take these neighborhoods that didn't look so great and actually really begin to shape them up.
What we believe, everyone deserves a nice place to live, regardless of circumstances and economic circumstances, environmentals, and background. Like our mission is to provide quality housing to people who would not otherwise have those opportunities.
Yep, and that's incredible, Mark. Incredible, man. So I don't want to go too much deeper into this episode. I think we gave the dent world and the Tactical Dent Tech audience really some great real estate plays here. And if you want to dig any further, Mark does have the ability to book strategy calls with his team. And is that ruggedrealestate.com? Is that what the website is?
Ruggedrealestate.com. And we've also we've linked my calendar to Tulsa Real Estate Investing. So TulsaRealEstateInvesting.com.
Okay.
And that drops you straight into my calendar link.
Yep.
And you can book a 30-minute session, and I'm happy to break it down, and we can see what makes sense, what doesn't make sense. I mean, if you're on the fence, I'm happy to talk you through it. If it makes sense, great. If it doesn't, great. If I can point you in the right direction, great. I mean, whatever works best for you guys. But.
And you can also go to my my Facebook, and you can find Marc Ruiz on my friends list. Send him a friend request. Too. Yeah, he's also in the Tactical Dent Tech group. So if you want to tag him in there, he'll keep a lookout for that, or I'll keep a lookout for it as well. And I also have the links here in the show notes. So I'll have all of Mark's links set up inside the show notes. So if you want to dig down, scroll down, and take a look, that'll be available. It'll also be on the Facebook post in the group where this podcast is. The video part is going to be dropped here in about a week or so. Yeah.
Got the camera.
Yeah, the camera's just rolling right over there. So, so you can get a hold of him. You can actually reach out and take a look and see what Mark's doing over there. And essentially, don't forget to ask him to plug you in with the Rugged Real Estate Facebook group, or you can probably just search that on Facebook and find it. But, Facebook's weird sometimes. Sometimes they show things, sometimes they don't. So just know that Mark is available not only in the group, but I'll connect you as well if you want to send me a DM or shoot me an email. So anyhow, Mark, I appreciate the massive amount of wisdom that you had provided us today on this show. And is there anything else you'd like to say before we jump off here?
No, I appreciate you having me. I look forward to hearing from you guys. And if we can help you, I'd love to chat.
Yep, and Mark's not going to try to sell you guys like crazy, just so you know that. If anything, he might try to talk you out of it. You might have to throw money at him before he'll take it. So don't think that it's going to be one of them situations. Mark's a good dude. He'll just really look out for you.
At the end of the day, well, one, I mean, my reputation is worth more than money.
Yeah.
Two, I mean, this isn't a fit for everybody, but for the right people, it makes a lot of sense. But if it doesn't make sense, I'm going to point you in a direction that makes more sense.
Right. Yep. And me and Mark, we both have tons of resources to help you, and we're here for you guys. So anyhow, y'all, I appreciate you. And as usual, I'll see you on the next one.